What's up, guys? All right, today we're gonna talk about supply and demand. So I seen a comment where I don't know the exact person, but someone had asked me, can I go over what supply and demand is and like true supply, true demand? Well, I believe I made a video about it already where I was talking about the point of interest is and supply and demand, but I'll go over it again today. It's not really something that's it's not something that's complicated. People can make it complicated, but it shouldn't be very complicated. All right. So what I want you to understand is this right here. Like getting straight into it. This right here. This is an area of demand. This is what you call demand here. Why do we call this demand? Because we know that buyers got into this market here. Okay, we know that with this accumulation schematic, we know buyers was buying this market. They was buying it here, 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 here. They was buying it all throughout this whole accumulation. That's basically what accumulation is. It's giving the buyers a chance to get into the market. Okay, they're buying the market here, taking out whoever bought here, and then the spring they're buying the market there. They're buying it all throughout in here. So that's why you get this big price action towards the upside after the accumulation is completed. That's why you get that big price action towards the upside, because you have people buying all throughout here. So we know that now. We know that people are buying here. We know that this is a level of demand, because once the market comes back down here, the probability of more people buying there is higher than people just trying to sell there. You feel what I'm saying? You don't want to. Who sells at a low price like this? So just make it make sense. All right, to buy high, not buy high, but buy low, sell high, right? So Wyckoff theory helps you identify supply and demand way much easier. That's why Wyckoff is like such a good theory, because it just helps you identify where areas of supply and demand is. It helps you see where the people are buying, where people are selling, where the banks, institutions, and all these people are buying, and where all these people are selling at. When you see an accumulation, that's just banks, institutions trying to buy it here. All right, they're trying to see, okay, is sellers still in control down here? They're trying to see, is sellers still in control? What's the lowest price that they can buy it at? Down here was the lowest price that they bought it at, and they came down here, bought it again. Okay, so when you see an accumulation, just know banks and institutions, they're testing each other out. All right, they're trying to see what's the lowest price they can get, how much people are buying here, how much can they get, how much can they buy here, what's the lowest price that they can buy at. You know what I'm saying? All that type of stuff. And then once you have this whole accumulation play out, you have this big move. Okay, so that's why Wyckoff is like such a good theory to learn, because it helps you identify points of supply and points of demand. So now you know this is a point of demand. You could expect the market to react off here, if not even make another high, right? You can expect, because after we taken out this little high right here, you could expect the market to maybe, right, accumulate again, create another level of supply, not supply, but create another level of demand, and go back to the upside, maybe taking out this high, right? So that's how you use supply and demand. All right. So with Wyckoff especially, this what do you call that? Support and resistance. I know some people might think that like that's supply and that is not supply and demand. All right, drawing a line out where the market is hitting multiple times, that is not a supply and demand. Okay, that's not demand. All right, that is not a demand area. You wouldn't go here and be like, okay, this line right here is demand. That is not demand. All right, because what's gonna happen if you're buying right here, here, here? They're gonna take you out. They might even go lower, or then they might create the demand. Right, then they might create the demand, but that specific area, that specific line or whatever that they draw out, I'm gonna make it clear so you guys can see it. That specific line that they draw out, that is not demand. Okay, you can't define demand by a specific price point. All right, demand is inside of the candles. All right, demand is inside of the candles, because basically what demand is just institutions buying the market. All right, so they're gonna try to get the lowest price that they can to buy it at, so no one else can get that price point. That's what the spring is. They take out everyone else that was buying here, and then they buy it at the lowest price that they can and go to the upside. All right, and then they just keep the move. They just keep the market moving. So whoever is the strongest hand in this like accumulation, that's what they're gonna do. They're gonna cause this break right here. They're gonna cause everyone else to get taken out. And it's not like they're just taking money from you. They're not just taking money from you. They're taking money from other institutions and other banks as well. So whoever has the strongest hands, whoever is really trying to buy the market, that's what they're gonna do here. Okay. And if sellers end up overtaking this, the market's just going to continue down, and that's where we get a redistribution. That's when supply is stronger than demand. That's why when you have a failed that's why when you have a failed accumulation, it becomes a redistribution, because buyers tried to buy the market here, you know, banks or whatever tried to buy the market here, but it ended up failing. Sellers were in control. Supply, there was more supply than there was demand here. There was not enough people buying here. There was not enough buys here to cause this market to move up. Sellers were stronger. The supply of the area was stronger, so it continued down. All right. I'm gonna show you this simple thing. Show you a photo so you can get a better illustration of it. Look at this right here, right? Oversold here. That's when you get to an area where the market is really cheap. When you see the market is really in a cheap area, let's say you have a high to low, right? You have a structural leg when you have a high to low, and the market is damn near the low, I'd say, like, you know, 70% retracement. That's why people use a 70% retracement and stuff like that, because the market is in a discount pricing. All right, when the market is in a discount pricing, people technically say oversold when the you know, in the beginner trade is, you know, oversold, overbought with the RSI, whatever. I mean, I guess, but this is the real way of looking at it, okay? When you're in an oversold area, it just means you're in a discounted area, okay? The market is in a discount. When you see the market is in a discount, you have the probability of accumulation playing out, because you have banks, institutions that are trying to buy the market. They're trying to buy the market because it's oversold. They can get it at a cheap price, okay? They can buy the market at a cheap price and cause a rally. That's where demand becomes greater than supply. Why? Because there's more people that are willing to buy the market down here than sell the market down here. That's where demand, the willingness of people buying the market down here, becomes greater than supply, right? All that means when it says demand greater than supply, that means people are more willing to buy this than sell it here. And that's when you get the accumulation and you get to move to the upside. All right. And then when you get to a premium pricing, which means it's at a high price, if something is high, you don't want to buy it that high, right? That's when you get the overbought. You got the accumulation down here. You move to the upside, and then now you're in the area of supply. You know, you're in the area where people are more willing to sell the market than buy the market. Okay, and then that's the basic buy low, sell high, right? When people say buy low, sell high, you think of it as simple, but when you think of it in a Wyckoff way, you're like, it really makes a lot of sense. All right, when you like dive deep into buy low, sell high, it makes a lot of sense. Okay, so right here you have supply that's greater than demand, so you have more people selling, more people willing to sell the market here than buy it, and then that's when you get to move down. And this is just a basic market cycle. You have people buy, and then you have people sell. People buy, people sell. It's like, that's the basic market cycle. That's how the market goes. Okay, so after this, now all it is testing. Okay, will this demand area hold? Okay, if this demand area holds, that means we will create another level of demand accumulation. That's when you get another accumulation. You have people buying in right here, and it will move to the upside. Okay, but if the sellers are stronger than the people that's buying at this demand, then the market will continue down, if you understand what I'm saying. So I'm gonna use another. This right here is a whole simpler way of looking at it. You have accumulation, reaccumulation, distribution, redistribution. Simple as that. This is the basic market cycle. I don't know if you guys can see that clearly, but you have accumulation, reaccumulation, distribution, redistribution. All right, simple. You have demand here. You have more levels of demand creating here. Then you reach into the supply area. You have sellers getting in the market. And then you have buyers trying to rebuy the market here. Sellers being stronger. The market redistributes and goes down. All right. Let's get into this, okay? Now I've used this, I don't know, for the second video now. This is a great example. Like I was saying before, distribution right here is a level of supply. Okay, this distro right here, I didn't mark it out, but it's a distribution. It's a type 2, right? This distribution right here is a level of supply. We moved the market down, right? The market came back up, and look at this wick. It came back up to test this area of supply. Ended up doing what? Creating more supply. Okay. Then what happened? The market moved down. What happened again? They came back up, test this area of supply, ended up creating more supply. All right, so I'm gonna go back and show you the distro in here. I believe it was like on the 15-minute. Yeah, you have a 1, 2, 3 drive move, break of structure, came down. That's your area of, that's a distro, that's a supply. Okay, so now let's look at this, right? Let's look at this in terms of looking at the market. All right, when you see the market creating supply, which is when you see the market, like, you know, just distributing, are you more likely to buy the market, or are you more likely to sell the market? You're more likely to sell the market because you see that the sellers are stronger than the buyers. Every time that the market tries to buy, the sellers end up taking over. You see, it's like 3 consecutive distributions, and then that's why you get, let me show you, that's why you get that right there. That's why you get this whole push to the downside, because you have institutions selling here. You have institutions selling here. They have so much entries. They selling here, selling here, selling here, and then that's why you get this big push to the downside. All right, because the supply here is greater than the demand here. There's more people selling here than there are more people willing to buy. Okay. That should be the clearest one out of all the markets for you to, you know, really see what real supply and demand is. Okay. Let's see if I could find something else. EU is good. Okay. Here we go. All right, EU. Let's look at this. All right, let's look at EU right now. All right. Why do I have this marked out? I don't know. Just delete these. All right, EU, what do we have here? We have a distribution here. Right, so let's see. Let's go down. After the market did whatever it did down here, all right? After the market bought down here, we reaccumulated. We was reaccumulating so much. There was so much buyers here. We reaccumulated, right? We was accumulating so much. We reaccumulated, right? We reaccumulated again. Reaccumulated. We came down, reaccumulated, reaccumulated. All right? This was our instant. When you're seeing so much reaccumulations, you know buyers are in control. All right? Buyers are in control. This area here is straight. There's no supply here. There's no supply here. There's no supply. There's no supply. Why? Because the buyers are in control here. All right? There's not enough people willing to sell it here. Right? There's not enough people. So that's why buyers just took control. Until we got up here. The market became to slow down. All right, the market became to slow down right here, and we created a distribution. Right now we see that the buyers are now becoming sellers. Now we can sell that, okay, now this is an area of supply, because we now have an instant where the buyers are beginning to weaken. All right, we don't see that much reaccumulation no more. We don't see that price action towards the upside no more. We see a range. All right, we're seeing this range where we see that the market has stopped that bullish push. Now we can say that the buyers are out of the market, and now we can say the change of hands are coming. So we're changing from buyers to sellers. So we know that the sellers are more willing to sell it up here than they were over here, and that's why we have this distribution that happened out here where buyers became sellers. And then look, the same thing where we was reaccumulating. redistribution, redistribution. Even down here, look, redistribution. Right here, redistribution. This right here, I don't know what this was. I was actually trying to sell the market here. I didn't see the clearest entry, so I just let it be. I was really hoping for a distribution inside of here. We did not get it. Okay, so kind of sucks. But just look at it. You can tell when the buyers are in control, when sellers are in control, okay? You have reaccumulation, reaccumulation, reaccumulation until we got up here to this area of supply where the market said, okay, now, not the market, but institution said, okay, now this price on your USD is a good price for us to sell, okay? And that's exactly what happened. They distributed their orders here, right? After they bought, they distributed their orders here and they got out of the market and sellers came in control. And that's how we have redistribution, 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 redistribute. Just now the market is in the opposite side. This is the market cycle. All right, and in this institution here, I mean not institution, but in this right here, we can see that the market is beginning to slow down. You see how this long sell to the downside is beginning to slow down. So what could we expect? Well, I'm not saying we can expect it now, but I wouldn't be surprised if we start ranging. Now, if you see this market start ranging, what do you know? The sellers are beginning to get out of the market and there's more people willing to buy it there, okay? And then you get this accumulation. You're going to get what? Reaccumulation. Reaccumulation. And it's going to be this the whole thing over and over again. That is true supply and demand, all right? That's how you look at that. And that's why Wyckoff is such a good theory to learn, because it helps you identify it way easier. All right, I hope you guys understood that. I gave a lot of examples. I mean, if you guys are still, a little bit shaky on it, let me know. And, just comment down what you want to see. All right? Just comment down what you want to see. I'll answer it to the best of my ability, man. But, yeah, when you start understanding this, it gets really easier. And you can tell when the market is going to go down and when the market is going to go up. All right? All right, peace out, guys.